spoke about, Corey, some of your experience across different areas within financial institutions, and even it sounds like you're about to tell us a bit more about your time as a monitor as well. So, speaking as a professional who's worked across multiple areas of banking, including at the supervisory level, what parts of the lines of defense do you think need to be strengthened, if at all? And if so, do these areas of improvement differ between small and large institutions?
Great question. I think that it's funny because sometimes smaller institutions like your average credit union, I feel almost take things more seriously because they have that smaller view. And they can look at their business and see it all at one glance. So it often ends up, when you go into a small credit union versus a large, say, worldwide institution, it ends up looking like the credit union is on it. And they are, likewise with the big banks, I think that there's just as much focus on seeing all of the risk holistically in the bank, but the picture is so complex and so spread, especially in banks that have international hubs, operational hubs, where they're not seeing all that risk. And so I think in any situation where you're an external monitor or an external auditor, your task is to really bring that different perspective and pull in those areas of risk that the larger bank is not seeing. That being said, I'd say across the small and large institutions, one of the areas that we always encourage strengthening, well, two, the risk assessment, always. Large or small, you can miss something, but secondly, governance is a priority. You can have the best risk assessment in the world, but if there is not a governance team that is really having ownership of ensuring that all areas in that risk assessment are cared for, that risk assessment really doesn't matter that much. So one of the things that I'm always looking at in banks is the governance team. What does that look like? And are all areas of risk owned by someone? Once established that they're owned, is that owner taking care of that area? Are they having regular meetings with their staff? Are they, that's a prime area of importance to me, and an area that I've been tasked with repeatedly. Also super important in technology, and there are specific calls from regulators for model risk governance. So going through your technology portfolio and defining those areas or those platforms which are models under regulatory definition. So are they informing a business decision, or are they simply a data aggregator? And I think one area that can be easily missed by a bank is having an inventory of all technology and appropriately defining those and then placing ownership. So it kind of becomes a chain reaction. You can have one part, right? But if you don't have the other two, it's going to break down. So that's something I'm always looking for.
That's so interesting. It's always amazing to me that when it comes to processes, it's really fundamental, and it's fundamental across the board. It's not rocket science.
Not at all.
That it really is just about, it's so interesting that it's really just about ownership, and understanding what things do and why they're in place. And if you can explain that, at least this is what I've learned from the interview series, as long as you can explain why you're doing what you're doing and outlining what you're doing, sounds like that's the best first step that you can make.
Yeah, and it really comes down to methodology. Do you have a defined methodology for what you are doing? And that goes a long way in if we have a bank that has an audit coming up, or even if we're in an audit, I will tell the auditees, like, the best thing you can do ahead of your regulatory exam is to have defined methodology for each of your processes, because the regulators want to see that this has been thought out, all areas of risk have been considered, and it's documented to where your board has sat down, looked at this through policy and procedure and said, yes, this makes sense for our bank, and yes, it addresses the risk that we, the board, are responsible for. So yeah, you're right though, very simple at the end of the day.
I love how I water it down. Me, a marketer. Very easy to say when you come in from the outside, but
you're not wrong though, you know. And I think that's one thing in my practice that I do take with me, whether it's in the US or has, you know, been international, is there is a simplicity in it at the end of the day. It doesn't mean you and your staff aren't working overtime and doing all you can, but there is a simplicity, and we are there to support that and also give a perspective, because sometimes when you're just deep down in the weeds of that compliance work, perspective can be lost. And I try to bring to the table that we are, as auditors, also there to help with that perspective and show whatever is missing. We're not there to attack, because, you know, the old jokes, if time an auditor walks into the room, it's no one wants to be your friend. But kind of changing that up, you know, to, and obviously there's a very firm line of independence, but we're also there to help through applying our expertise and noting those areas which are failing. So see us as support, even though maybe that's not the way we're normally seen.